trade breakdown of NQ Nasdaq. So this is a trade from the previous week that I was supposed to do a trade breakdown. I promise you all that, and I'm here to deliver it. So real quick, this was a very beautiful trade, and it was more of a swing trade that started as an intraday trade and then later on to a swing trade. And I will be taking you through the basics and the logic and thought process behind the trade and the whole trade idea, right? So as we all know, or as most of you should know by now, there is criteria that are supposed to be met before you actually look to take any trades. I'm going to say this: you have no business on the lower time frame. You have no business on the lower time frame if you do not even know where the higher time frame is headed to. I'll repeat that: you have no business on the lower time frame, and by the lower time frame I mean the 4 hour, the 1 hour, the 15 minutes, the 5 minutes, the 1 hour, right? That is the lower time frame. And which is the higher time frame? The higher time frame is the daily time frame, the weekly time frame, and the monthly time frame. That is the higher time frame. So I'll repeat that: you have no business on the lower time frame, all right, if you don't even know where the higher time frame is headed to. And I will be giving you an example on that shortly. So here's the trade. This was actually the trade idea, and it was a trade of mine I shared in the group, in the private group, before the move actually happened. And I'm just going to be breaking everything down so that you have an understanding of what actually happened. So the real thing, at the beginning of every week or at the end of every week, you need to be able to review your markets. Go back to the charts and watch out for the previous week's close, the previous day's close, and the previous monthly's close, right? Because closes, opens and closes are very important, right? Because it's only with closes that we can use to frame bias. Framing bias is a topic for another day, but just for the purpose of this video, being able to know if we did weak or a close is very important. For example, week below is higher prices, week above is lower prices, close above, higher prices, close below, lower prices. So it's just one of the tips to help you frame bias. So once the week actually closed, my eyes were on this fair value gap. And one thing you have to know by now is you need to be able to know why price moves, right? And for as much as I've been in these charts, and to the best of my knowledge, price actually moves for only 2 reasons, right? Number 1 reason being to seek buy stops and sell stops. All right, buy stops and sell stops. These are highs and lows. Buy stops, these are all highs: previous monthly high, previous daily high, previous 6 months high, previous year's high. And then sell stops: previous day's low, previous week's low, previous month low, and so on, right? So every time you see price moving, you need to ask yourself, what low are we headed for, right? What low are we actually going to be headed for, or what high are we headed for, right? This is the question to ask yourself. You need to be asking yourself questions. Then you should be able to provide answers. And where you are stuck and have no answers, this is where you need a coach or an accountability person that can give you answers sometimes when you're confused, right? So that is number 1. The reason number 1: price moves to take out buy stops and sell stops, and these are highs and lows. Very important. Then the second reason that price moves is to balance imbalances, right? And these are like fair value gaps. Price will move from fair value gaps to balance other fair value gaps, and then your role or your number 1 duty being framing the fair value gaps to buy from and fair value gaps to sell from, because not every fair value gap is going to be good for sales, and not every fair value gap will be good for buys. So your role is to identify the fair value gaps in discount and buy from those, and those fair value gaps in premium to sell from those. With that out of the way, fair value gaps are a very important, liquidity pools. All right. So to frame all this and put it all together, you need a clear understanding of internal range liquidity and external range liquidity, right? And I'm going to be showing that in a minute. Internal range liquidity, this is the fair value gaps, right? As I just said, fair value gaps. And then external range liquidity, these are highs or lows, right? For example, this high here is external range liquidity. And then this fair value gap is internal range liquidity. But it wasn't actually taken out. But if you go to US 30, we actually took out that low, that fair value gap, and then we came for the external range liquidity, which is that high, right? Giving us an SMT. So the trade idea was this. I'm going to make it short. We had this fair value gap on the low, and this is why you need to have logic, you need to have narrative behind your trades. An average ICT trader would look at this fair value gap and say, yes, we're trading into this fair value gap, and would be looking for for sales until we actually reach this fair value gap. But that is not always the case. This is why you need to be able to frame buyers and have logic behind that. So on all three, which is Nas 100, the S&P 500, and US 30, we had this fair value gap. That fair value gap wasn't tested on NQ, all right? The same as S&P 500, it wasn't retested. But then US 30 actually retested that fair value gap. And this is an SMT. It's a type of SMT where if you have 2 to 3 correlated assets, one actually fills that fair value gap and the other two assets fail to. This is where you have an SMT fill, right? I will not go deep into that. The other thing giving us an SMT is being these lows, right? These lows right here. These lows right here on US 30 have been taken out, while on S&P 500 and Nasdaq, those lows weren't taken out. You can see right here. See this? We see this willingness for price to refuse to close below those lows, giving us an SMT. So as soon as this happens, now my interest shifts from selling into the fair value gap on the weekly to actually buying, actually looking for buys, because we have an SMT on the lows and it is a higher time frame SMT into the fair value gap. All right, the fair value gap is a key level at this point, and we have smooth highs on this, and this actually changes my interest from actually looking for sales to buys, and I'll be giving you that for a second. So here is the thing: as soon as you find out where your bias is going to be, this is only when you're actually accepted to go into the lower time frame. And that's why I started the video by saying you have no business on the lower time frame if you don't even know where the higher time frame is headed. All right, liquidity pools will tell you where price is going to. All right, liquidity pools will tell you where price is going to. For example, liquidity pools, we all know these PDRAs, key levels on the charts. This high is a liquidity pool. This fair value gap is a liquidity pool. All right, liquidity pools will tell you where price is going to, and then time will tell you when they're actually getting there. All right, time is very important. Liquidity pools will tell you where price is headed, while time of day of the week of the month, all right, or an hour of day will tell you when price is going there. So as soon as I saw this, I'm now interested for buys, and this is where I drop down to the daily time frame to find me a trade idea on the lower time frame that gets me into the direction of the high time frame. So notice how I start with the high time frame, find me a reason why I should be bullish before I actually drop down to the lower time frame. By the lower time frame, I mean any time frame that is lower than the time frame that you're actually on. Right now I'm on the daily time frame. The time frame I was on earlier on, that was the weekly. So this actually becomes the lower time frame to the weekly time frame. So it is only after finding out where my time frame on the higher time frame is headed to, this is when I drop to the lower time frame. So right before this happens, we have a trade idea, potential trade idea. All right, and Price comes in here, fails to take out these lows, giving us an SMT on the daily. We have this move to the upside and close above this candle, right? Now this candle is actually an order block. ICT traders, why is it an order block? A thick down close candle. This is a thick down close candle that takes out multiple lows to the left. When closed above, all right, that becomes our order block. So I hope that makes sense. So now we have an order block, which is our key level. The number one thing that we did put away was the bias. We have framed the bias. The bias is bullish. That is number one. The second thing is the key level. All right, these are the backbones of our trade idea. Without these backbones, our trade idea actually means nothing. So key level is actually our order block, this daily order block. And then the next thing that we need is the title soup. All right, and the title soup has to be the title soup of a purge. I mean a purge of a range that is our trade idea that will then take us into the direction of high time frame, which is being this high and this high. So right now we have this, let me remove this real quick. We have this range, right? Notice how I marked out my key level beforehand. This, I came in the morning and told my group members in the private group, that I'm going to actually be buying Nasdaq. The indices are going to be bullish. We had this key level in place. I was on the high time frame. I've just told you right now we are bullish, and now we have this CRT range. All right, this is a range. This was actually Tuesday, and I was actually anticipating Wednesday low of the week. All right, but then it's not just Wednesday low of the week, it is Wednesday low of the week with a narrative, with a reason. All right, so right here we have this range. So what I'm looking for is a title soup of this low. All right, something like this, something like this. All right, so this being that I take a trade, all right, inside of this range, my first target is going to be the high. All right, the CRT high. When that is done and met, all right, I move my stop loss to break even, I take my partials off, and then head on for the external range liquidity. All right, which is this high right here. This is the best ways to catch swing trades. This is the best ways to catch my long-term trades that go on for days, week, or even a month. All right, I have done this several times, and this is the way I do it. All right, so right here is my trade idea. Wednesday, Tuesday is the CRT candle. I'm waiting for a title soup to happen in here, but then to add on to this, we have an SMT on the weekly time frame, which is a higher time frame SMT. That is good for the higher time frame bias, but then I'm framing a trade idea on the lower time frame of that, which is the daily time frame. I'm looking for a title soup to happen of this low and potentially an SMT divergence for me to be able to take this as a long. If we come onto the S&P 500, all right, you see that if you come to the S&P 500, this low was actually taken. This is the same CRT candle. We have this order block and we have our CRT range, and the low was taken. All right, you come to US 30 because these are correlated assets, and this is where my signal was given. Right, you see right here we have this SMT divergence. All right, Wednesday actually failed to take out Tuesday's low. All right, on US 30. Right, we have the same trade idea, we're still bullish, and I'm going to show you. All right, but for now this is what I'm working with. All right, this is what I'm working with. Wednesday actually failed to take out the low of Tuesday, and S&P 500 we took out the low. Right, and on Nasdaq, all right, the trade idea we are taking, we actually took out the low. So now, apart from us having the high time frame SMT, we also have this SMT. All right, so I'm trying to make sure that this makes sense to you all, because As much as you have the higher time frame figured out, you need correct read and an entry on the lower time frame so that you don't get stopped out, or so that you don't get the whole thing wrong. So after this is in place, we have an SMT on the daily time frame. I now then drop to the daily time frame, I mean to the 1 hour time frame, because time frame alignments. All right, daily CRT has its range, has its own range, it has its own criteria to be traded. So when I bring it to the lower time frame, all right, this is the 1 hour, this is the 1 hour time frame, and this is the first status stop that we get, and then this is where actually the trade idea was actually birthed. So right here is where I actually entered. And to have a smaller stop loss and give yourself a tighter stop loss to be able to risk certain amount and hold for the whole entire range, you can even drop down to the 30 minutes. All right, 30 minutes time frame. I'm going to be showing that shortly. So exactly right here is where the trade idea was. So now I'm bringing you to another important factor, which is time. All right. So the other thing that I'll have to talk about is time. All right, because as much as if you have everything figured out, if you still get time wrong, you are missing something. All right, and time for this aspect is 9 a.m. right? So it's a Wednesday. Wednesday is actually a classic expansion day, and then we are framing our trade idea as the low of the week. All right, the low of the week is in, and then we are also positioning ourselves to enter the trade at the right time, which is 9 a.m. for this case. So right when we had this, right, so we had this 9 a.m. open, this is a 30 minutes candle, and then 9:30 opened low into this, right, into this candle. So it took out the low of this, which is at 9:30. 9:30, this is the time for manipulation to happen before we actually have a distribution. All right, so right here is when I had my entry. So I'm just going to show you that. So as soon as we had this title soup and we had a confirmation, I had my entry, and the entry was this. So the trade was actually first being a daily CRT. All right, so this is the entry that I had, and I shared it the group and also members in my group. All right, so as soon as this plays out, this is about 10 to 11 now, right? It plays out, which we then get delivered. But then, as I showed you on the weekly time frame, we are much more bullish. So now, because you are aware of the higher time frame, you are able to take trades on the lower time frame with a lower time frame risk, but for a higher time frame reward. Right now, you're able to risk small amounts. I mean, you're able to have a smaller stop loss, targeting the daily CRT high. Once the daily CRT high is done, then you go for the weekly. All right, the external range liquidity. It gives us about something like a 30 hour, right? I actually don't focus on these RR tools, but that is it. So basically, as soon as we take out this high, all right, you see how price closes above and then bumps back into the range, all right? Because it is a breakout. We break out of this range and we retest with this. So actually, this was actually the whole trade idea, and you have it. All right, so it's as simple as that. So the whole thing, to have a recap of this, all right, is that before you actually even do anything, you must have a clear read on the higher time frame. And once you have the higher time frame figured out, this is only when you're actually allowed to go into the lower time frame. All right, so the move was a very beautiful move, and it will actually play it out for I don't even know, this was around Wednesday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday. Played out for about 5 days, right? And it was a clean one for sure. So just to recap this, all right, you need to have a clear read on the higher time frame, right? Clear high time frame bias, clear draw on liquidity. This high is my drawn liquidity before you think of going to the lower time frame to find. So basically, this is it. You need to have a clear read on the higher time frame before anything else on the higher time frame. So it's always very important to have a clear drawn liquidity. So first of all is higher time frame. Higher time frame drawn liquidity. All right. And then it is only when you have a clear high time frame drawn liquidity that then you have a high time frame bias. All right. Bias and narrative. All right. And then once you have clear high time frame drawn liquidity and the bias and narrative are in place, this is when you actually drop down, all right, to lower time frame. All right. And then wait for turtle soup or SMT at highs. All right. And then turtle soup has to happen at a key time, right? Time. All right. And then once this happens at a key time, then you need a lower time frame entry confirmation. All right. All right. So this is basically it. There is a procedure you have to follow, and it doesn't change no matter what day you're trading. It doesn't matter what pair that you're actually trading. It actually stays fixed. You look for your higher time frame drawn liquidity. You have your bias and narrative correct, and this will come from the higher time frame. And once this is clear, right, you need a key level. All right. So this is another thing I left out. All right. Higher time frame key level. All right. Once you have a higher time frame key level, then you can then only look for trades that are having turtle soups into the high time frame key level at a high probability time into the direction of the high time frame bias to the direction of the drawn liquidity. All right. This is basically it. So real quick, I just wanted to give you guys the logic behind this trade, and it was such a beautiful move. It actually played out well, and yeah, this was everything I was looking through. You need a clear understanding of internal range liquidity and external range liquidity, because this will give you a guide of things to look for, when to look for them, and also help you to be able to know what price is seeking to do next, right? After taking out lows, what high is most likely to be taken out next, right? So with all that being said, have a good weekend and have a good and fruitful trading week ahead. I'm out.